Hello and welcome to this week's edition of the Clinton Howell Team's Weekly Market Update. I'm your host, Clinton Howell, broker with RE/MAX Escarpment Realty. What is happening in our local markets and what is happening with inflation? What is happening with the interest rates? What is going on right now with our economy? There is so much to talk about right now and so much on our minds. We've got tons of mortgage renewals taking place. I think it's something like 50% of the mortgage owners in the country are renewing in the next 12 months. We've got inflation has been the big point of discussion for the Bank of Canada in terms of lowering the interest rates. I've got a great article in my hands here from the Financial Post. Inflation risk fading. Latest data has economists predicting multiple rate cuts by the Bank of Canada. This is great news. I've got a number of headlines here within this article. Here's a point here. Statistics Canada July Consumer Price Index showed a significant cooling in inflation, with the rate easing to 2.5%, the lowest since March of 2021. This is wonderful news. A big part of what the interest rates are all about is trying to control the economic growth, trying to control inflation, trying to keep things growing at a pace which is sustainable. So it does affect us, though, significantly, though, in terms of the cost of borrowing. It affects first-time buyers. It affects pre-approvals. We've got tons of people in the country with mortgage renewals coming up, and these rate cuts are very important. Now, keep in mind the fixed mortgage rates are more affected by bond yields, whereas the variable rates are more immediately impacted by the Bank of Canada cuts. So here's some headlines. Plenty of room for Bank of Canada to keep cutting. That's the TD Bank. Rate cuts will keep coming. Bank of Montreal. Canada's disinflation solidifies the case for September rate cut. That's RSM Canada. Enough to quell concerns about sticky inflation. RBC. Growing possibility of a larger 50 basis point cut later this year. Capital Economics. So the general consensus that I'm seeing is we'll see a quarter point cut on September 4th and then likely another quarter point cut in October. We never really know until decision day what's actually going to happen, but these are good positive signs that the relief is on the way in terms of the cost of borrowing. What's happening specifically in our local areas? We've got Burlington here to start with, 577 active listings, similar to last week. 134 sales in the past month, which is very similar again to where it was last week. And we've got 4.31 months worth of supply, which is up slightly. So we got a 40.98% absorption. That means 40.98, so 41% of listings that came out in the last 30 days got sold. This is considered a buyer's market. 50% is considered balanced. Above 50% is a seller's market. So we're still sitting overall in a buyer's market. Now, not to say that a property can't come on the market and sell the same day or have multiple offers. These things still happen in a buyer's market. It really depends on the pricing strategy. If something comes out priced really well at market value, it's going to sell quickly. If it comes out overpriced, it's going to sit until the price gets corrected, and often that will impact the overall success of that sale getting top dollar. How many days on market in Burlington? Things are selling pretty quickly. Things that are selling median number of days on market is 15, average 28. It's very similar to what it was a week ago. We're seeing a bit more negotiating room. The median is 96.92. That's the sold price versus the original list price ratio. So we've got just over 3% off, typically what we're seeing on most of the successful transactions. In the Hamilton area, we have 1,993 active listings, which is up slightly from a week ago. 437 sales in the past 30 days, which is slightly down from a week ago. 4.5 months worth of supply. So we've got, again, a buyer's market condition here in Hamilton, 42.18% absorption. Median days on market, slightly higher than Burlington, 22 days. Still pretty quick, only 3 weeks. Average days on market, 33. So on average, about a month. We're seeing just under 3% in terms of the negotiating range for most of the successful transactions that have come together in Hamilton. In the Oakville area, we've got 529 active listings, which is down a little bit from 545 where it was a week ago. 105 sales in the past 30 days. Which is up from where it was a week ago. So that makes sense why the supply is reducing slightly, but there's still a lot of supply, 5.04 months worth, which is down from 5.92, mind you. And in fact, this has shifted the absorption rate. Last week we were at 35.25%, and that's gone to 43.39%. So we're still in a buyer's market, but not as strong of a buyer's market as where it was sitting a week ago. Median days on market is 31, so about a month. Average days, 37. We're seeing just over 4% on most of successful transactions in the Oakville area. That's all I have for you today. If you have any questions for me about the market, anything I've mentioned today, or you want to learn more about your specific property, please reach out. Love to hear from my fans. Have a great one.